Agribusiness. Today we're going to tackle about the fundamental analysis using financial ratios, specifically price to book value ratio. So when we say the price to book value ratio, PB ratio is a crucial metric in fundamental analysis, offering insight into a company's market value relative to its book value. So when we say book value, it is often represent the total value of the company's asset minus its liabilities. So which is essentially the net worth of the company from an accounting perspective. Over B ratio, it is the ratio that is particularly relevant for investors seeking to understand the intrinsic value of a company and its potential for growth. So when we say intrinsic value, it is to perceive or calculated true value of an asset investment of company based on fundamental analysis. So it reflects the underlying worth of an asset independent of its current market price. And the P over B ratio is valuable tool in fundamental analysis because it helps the investor first identify undervalued companies. So a low P over B ratio might indicate that the market is undervaluing the company's asset and future earnings potential. So second is to assess the efficiency of asset utilizations. So a higher P over B ratio could suggest that the company is effectively utilizing its asset to generate profits, while a lower ratio might point to inefficient asset management. Third is to compare companies within the same industry. Comparing P over B ratios across different companies within the same sector provide insight into relative valuations and potential investment opportunities. Formula of price to book value ratio is calculated market price per share over book value per share, where the book value per share is equals to book value over the number of outstanding shares. Give examples. So let us consider a real Philippine-based company which is SM Investment Corporation or SMIC. So let's look at the examples. So the SMIC as of December 1, 2024, the market price per share of SMIC is 1,000 pesos and the total asset of 1.5 trillion and the total liabilities of 0.8 trillion and the number of outstanding share is 2 billion shares. First, let us calculate the book value per share, which is calculated by the book value of 0.7 trillion over the number of outstanding share, which is 2 billion share. That would be the total of 350 per share. So, aha man na ito gikuha ang 0.7 trillion na book value. So, the book value will be calculated, the total asset, which is 1.5 trillion minus our total liabilities, and that is 0.8 trillion. That is why natay 0.7 trillion nga book value. So, na naman tayo market price per share, which is 1,000 pesos, over atong i-calculate nga book value per share, which is equals to 350 pesos per share. That would be the results of 2.6. So, that is why in our interpretations, the SMIC has the P over B ratio of 2.6. This means that the investor are willing to pay 2.86 pesos for every 1 peso of the company's book value.
Real-life application to price to book value. Managers utilize the PB ratio to assess their company's performance against industry benchmark. So, managers ina-utilize niya ang PB ratio, ina-assess niya kung sa mga company performance and identify areas for improvement in asset utilization and profitability. Price to book value na po sa advantage and limitation. Limitation and advantage. First, the advantage is easy to calculate and understand. So, dali ka i-calculate ay sabton. The PB ratio is relatively simple to calculate and interpret, making it accessible to a wide range of investors and analysts. So, second advantage is useful for comparing companies within the same industry. The PB ratio provides a standardized measure for comparing the relative valuations of companies within the same sector. So, here are the limitations of price to book value. Ang limitation po sa price to book value is not suitable for all industries. Dili applicable sa tanan industries. The PB ratio is less meaningful for companies with significant intangible assets such as technology companies or those with high brand value, as their assets are not fully reflected in the book value. And the second limitation is does not consider future earnings potential. So, dili tayo consider sa kanang maabot pa ninyong income. The PB ratio only consider a company current book value. So, ang gina-consider lang is kung unsa ang karon. Kung sa mong current book value sa karon lang, di lang ginapa ng maabot pa mo future. and does not consider future earnings, growth, or other factors that could influence its market value.